Hi, I am Prof. Sumit.
Hi, I'm Zheng.
Welcome to the second part of the series where we're going to talk about investing. Most people around the world do not invest in the stock market. Only 9 to 11% of people actually do have an investment account and trade on it. Among the younger population, half of the people are unsure about where and what to invest in. Do you invest?
Yeah, I do invest. I diversify my investments quite a bit. Besides that, I also believe in index fund, which is why I put quite a significant amount in the index fund, especially the S&P 500.
I agree with you in the sense that young people should think about their investment decision. First, what to invest in. Second, what is the right platform to invest through. And third, how much to invest. I would highly discourage individuals, young individuals, to buy individual stocks. Those are highly volatile and you have to take on a lot of homework to follow these stocks. The other thing I would not advise individuals to invest in is these exotic products like Bitcoins. They are very volatile and you have no idea how much you could gain in a day and how much you could lose next day.
Sounds like for students, Prof, mutual funds seems like the best option out there.
Yes, I think I would say even I, who has been in this industry, in finance for 25 years, I only buy mutual funds.
When I first started investing, like many individuals out there, it was during my NS days. Yeah, so investing was a very popular term back then, so I feel like I should really make my money work, which is why I double down on whichever investment that could potentially give me the highest risk, and that will be individual stocks. Back then, what was very popular was Tesla. Everyone is talking about green energy, how electric cars is going to take over the world, which is why I just went into it and without doing much research. And little did I know that the volatility is quite insane.
Yeah.
Some nights I couldn't sleep. It's just too volatile.
Yeah.
And I think slowly after doing more research, I realized that actually mutual funds seems to be the better options. I adjust my investment strategies and move more towards mutual funds and ETFs.
So I think we should not churn the portfolio too often. The more often you will churn the portfolio, one, you will be paying a fee to get into the market again, and that reduces your overall return or profitability. Second, we don't know what's the right time to get in and out, especially for mutual funds. Typically, you should not be trading, you should be investing, which means buy and hold for a long time. When I say long time, it's like years. If you hold it for 5 to 10 years, that's when you'll realize the long-term returns. If you're just trading, you may make quick money on a day or a week, but then also you will lose quick money the next week or the following week. So don't be in the trading business, be in the investing business for a long term. Churn the portfolio every now and then because your preferences change, the returns, the long-term return of the industry may be changing, and that's when you should adjust your portfolio.
We asked our viewers on Instagram to send in their questions about investments, and in this segment, we will answer some of them. So the first question we have from our viewers is, how can someone with a tight budget start investing?
I would not encourage that if you have saved up, say $500, let me go find a way to invest. $500 is a good buffer stock that you could keep in your checking account or savings account for needs you may have the next month. When you have saved enough, then you should go and look for investments. I don't know what enough is, could be a few $1,000s. Then you can say, let me open up a trading account and then let me see what kind of stocks. As I said, the first thing you should look for is a very simple mutual fund. Once you're into the fund, then every time you have additional savings, then you should say, how do I up that savings? Maybe I invest in the same fund. Maybe I need to look for a different fund that actually pays dividends. So I have a very well diversified set of mutual funds that cover a broad set of industries and geographies. So you can think of like that. But don't rush into investing when you have little money. Try to save it because you may have more immediate needs of money on a month-to-month basis.
So the second question we have from our viewer is that what are some platforms that you recommend to track and manage investments?
There are all kinds of free tracking funds. I mean, I have some on my iPhone that, like, I think iPhone itself has an app that allows you to track individual stocks or funds. That's a good place to start. If you are going through a financial institution like DBS or any other institution, they also have a tracker or an app that you can download on your phone.
I think for myself, how I track is pretty straightforward. I sometimes go to Yahoo Finance or even through the brokerage account. Like for Tiger, Momo, this kind of brokerage account, they actually have you can track the particular stock or particular fund that you are investing in. So it kind of makes things quite convenient.
So we have come to an end on investing. Thank you for watching our video. I hope you have watched our other videos on investing and on retiring comfortably. Stay tuned for a few other videos that we are making.